Okay, guys, let's put the Wyckoff theory into practice. So, actually, you can describe the whole market with these concepts. It's really not difficult, so you can view it actually everywhere, okay, on every time frame and in basically every single situation. Now, if I'm just looking this kind of thing right now, the GBP/USD from a daily, you can see here, this is, for example, for me, an accumulation phase on Wyckoff, okay? So you can see your price consolidated. So we can right now even go here lower. Let's just check out here the lower time frames, what the market did at the end. And we can see how this pattern right now really occurred exactly like we wanted to see. So price is just collecting here a ton of liquidity. For example, here price is moving to the downside, testing the market, then breaking structure, trying to tell you, yeah, market will be bullish, but then going lower below that, collecting liquidity from here, price pushing up higher, breaking structure, and that was then actually for me the end of it. This is where then I would look for a potential entry, exactly like I explained it to you. Look after the break of structure for your in this case your spring to the downside, okay, and try to capitalize actually at this one. So you got here your break of structure, okay, and only after you got the real fake break of structure you should look for it, because you know this is liquidity, okay, you know that this is liquidity. This is a simplified version of using liquidity. I will not name right now everything, because for me it doesn't make sense to name the words that Wyckoff used. What we need to know is just this is liquidity. Price faked out people here, so above there was also liquidity, like I explained to you. So you even have your equal highs, just to give you some other names. And yeah, break structure. Then this is the origin of the movement. This is actually the last positions that they have. So what I would like to see is actually to join the market exactly over there. And then from here, the whole market started to move up higher. Then here breaking again some structure and just following the whole thing. So just by understanding here, guys, this very simple thing, you could have been really rich by just using this trade. So of course you need to understand what the market is supposed to do in the future, but just to show you right now what's possible. So Waka theory is super strong theory at the end, and it can be reflected really anywhere, everywhere. In this case, why it worked out was because of course you have here a ton of liquidity. Why? Because you're below these lows, okay? It's below this kind of thing. Here you always have liquidity. So if I'm watching right now here the weekly time frame, it's below the zone here. This is liquidity, so it's spiking below. It's the lowest low possible. So you're just looking right now then for market to give you something. So this is exactly kind of the thing that you should do here. Liquidity below this, and then you wait for price to manipulate the price, okay, and then you're joining, right? You're joining then exactly at the last demand zone in this case. And that's it. That's the whole theory, putting it in practice. So let me just show you right now then the other examples that we will find and how you can actually put everything right now together. So that was your first accumulation. What the market then did is markup phase. Then here you got something like distribution. On a lower time frame, you will see that this is a clean distribution. So if I go here, putting here 50-minute, for example, that this here is my distribution. Okay, so always targeting this kind of thing is always your distribution. This one here is as well your distribution. From here, price started to drop down. Okay, so this is your distribution. So you got at the end mark up, distribution, mark down, mark up, distribution, tuck, mark down, and so on, guys. You can always reflect everything. Now look at this. For example, here, this doesn't look like we've learned it, okay? This is why I've told you that we're not using the same thing like Wyckoff has taught us, because it will not always work, because liquidity can be otherwise reflected in the market as well. So it doesn't need right now to go above, because liquidity is in this case generated here. And because of price broke structure, for us this liquidity is more relevant than this liquidity above here. Of course, if price would go up higher, then I would be as well interested in getting involved into a short as well. But in this case, we always need to monitorize exactly these things that are interested for us. And in this case, if you would right now just put this, delete this, and only viewing this one, then you will see, yes, this is our accumulation phase. This is it at the end, okay? Because price is forming our BC and UT and UTAD. So let me just show it to you. So you got your PSY here. This is your PSY. Price dropped here lower, then came all the way back up. Then you got here at the top your BC. Price moving lower. Then you got your automatic reaction over here, the AR. Then price is moving up higher, putting here ST. Dropping afterwards lower. This is the SOV. Right, sign of weakness. Then price from here started the next move up, the up thrust. This is where price cleared in the first place liquidity from here, dropping lower. Again, you have your automatic reaction, and then okay, price said, okay, we don't have enough liquidity, so let's get it one more time to the upside, the UTAD, and then price, started moving to the downside. Okay, but you need to view it then like this. So you just need to understand actually what the market is doing. So you don't need automatically right now to use these names, because these names are concepts as well, right? So you would like to see where is my automatic reaction, where is my upthrust and stuff like that, okay? Where is my buying climax and so on, guys. So this is very easy. So actually don't know what to tell you here anyway, because it's very simply stuff at the end. Okay, so just watching the market, you can really see it everywhere. Okay, so whenever you see a price is at a low, like here, accumulation, distribution, accumulation, or what I did mention in the theory is redistribution and the reaccumulation. This is something exactly between. For example, this one, you can use it as a form of that as well. It's just part of the markdown phase in this case. Okay, so it's the markdown phase, but price then is just collecting again some liquidity by bringing the price back up, redistribution, dropping lower, then again up, redistribution, duck. Okay, you can view it like that as well. Okay, so this theory really allows you to put everything into practice. So it really will remind you right now, after we'll just map this whole things out, more than likely, like these are just structural points at the end, right? Accumulation phase, look at this. This is very easy in this case. So we can see price broke structure, push up higher, and then just went over here into the last down move candle that you had before price started to move up higher. So that was your spring, and price just started moving up higher. Then here again, you got a distribution phase. I'm not telling you right now that every distribution phase is super easy to recognize. Let me just check it out. Oh, damn. Data not available. So I think that this data is only reflected on. Can we go to the 30-minute? Yeah, or 50-minute. That would be, yeah, 50-minute. So look at this. Can explain it to you from a 50-minute perspective as well. What the price is doing, testing, right? Testing market. This is our PSY. Always this concept. Price moving up higher, and because of we know we are here in the middle of nowhere, we're above every kind of high that we can find over there. So you also, if you're switching right now here to the daily time frame, you will see we are here at a supply zone. Okay, so this is a high liquidity point, so we know price could do here anytime something, and it will do anytime something if you would like to do it, and our job is then just to recognize it and to react on it. So let me just check it out if I can find it here. Minute 5, perfectly actually, this example. It's also distribution phase. Why? Price moved up higher, okay, our BC, move down, automatic reaction, ST, and boom, price dropping, then they're putting up here, and then they're selling it from this order block to the downside, okay? So everything can be kind of can be viewed in an accumulation phase or distribution phase. Some make sense, some doesn't make that much sense. For example, this example, they didn't make that much of a sense, but for example, here on the GBP/USD, this is a clear Wyckoff accumulation. This is a perfect example of Wyckoff accumulation. So whenever you see something like that, completely come and attack it. Really, that's something which is super easy for you then to do. So for example, here in this case, so I don't know how long you're following me right now, but I've been recognizing this this distribution phase already from the very beginning, because I've seen this is a big liquidity zone, and then price tapped in like this, then wicked above, went lower, boom, 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 and this is here everything started. From this point, it was clear price will go up higher, will fake out, will take out the liquidity. And now let me just mark this down for you. This is at the end your UTAD. Okay, that's your UTAD. Then PSY, you have multiple PSY, but I would choose this to be your BC. This one to be your BC. Dropping price lower, automatic reaction, okay, because you're still in trend. Then you got the ST here, you're dropping the price, breaking it, buying the market from here, okay, from the SO, we're buying it, putting it into, only UT, sorry guys, only UT, and then it's done. The whole thing is done. Break of structure. So let me just explain it one more time. So we are here at a high accumulation, high liquidity area, and it is an area based on a weekly time frame and monthly time frame. So you can see an accumulation phase, in this case on the 4-hour. What we would like to do is to recognize an accumulation phase and distribution phase also on the 1 minute time frame, for example, or minute 5, minute 15. It's not a problem. Time frame is always not a problem. But what we can do if you see it on a higher time frame is actually we can then use this kind of distribution phase to rock it all the way to the downside, to have a very big risk reward to the downside. So let's go through the steps, what the market did. So it tested the market. This could be viewed as the PSY. Price went up higher, okay, creating the BC, automatic reaction, okay, because here you're still in an uptrend, you created a higher high, but this wick already signalized us that institutions are here. Institutions took the first short positions, okay. That's step number 1, like we discussed already. Price dropping to the downside, pushing up higher. ST is dropping, okay, and then with the ST we are here and we're breaking the first structure, okay. Very important, it's the first structure break that we do, but this structure break is not relevant for us. This break of structure is only here to bring out the people to short this market, to trigger all these sell stops that are located here, to get these stop losses, and therefore to wait for price to come then all the way back up. Then we got all above these areas, you can see pretty nice trend line. You get trend line liquidity, so price actually is grabbing this trend line liquidity. This is the first reaction because it went above this high. Price used the liquidity, went lower, then pushed up higher to create to take the liquidity above the buying climax, putting it up all here at the uptrust, and then from there price is dropping. And this is for me right now my first real break of structure, and we will also go over that topic, what is right now real break of structure. In this case, this is a real break of structure. It doesn't look like it is because price didn't close below it, but right now the overall confidence what the market is doing here. So you should then definitely use here this range, okay. This is definitely then your new range, and what we know as well is that the price here, that was the last up move, okay. That's the last up move, and all the way through this up move candle you can watch for price to give you your confirmation to get involved into a short. And yeah, then you could have been refining this kind of thing here like this, because you got this better structure, and on the lower time frame you will find then better entries as well. But this is how we use the accumulation phase, the distribution phase from Wyckoff, to use it as an additional confirmation for our trade setups, right? And here, for example, look at this, price really tapped into this last movement. So here you got also structural point as well. Look at this. This is our real last movement. So I didn't recognize it right now, but this is, you can take always the whole movement, because this whole movement was responsible to take this whole liquidity. You can always do refinements, that's normal. But in this case, I will refine only till this zone, because from here you can see how price is selling one more time to the downside, and then it started moving up higher. So that's really the last thing that the institutions has done, and they've been mitigating everything over here, and then boom. Okay, let's see if we find something on the lower time frame. So for example, here you can then easily use this refinement zone, or even lower refinements. Everything is possible over there. I think on the minute 5, but I'm not sure if I can go that. Oh, I can go. Good. That's a problem with trading view back testing sometimes, because you can't go that far to the downside. And if I'm looking here to find an order block on a minute 5, then I can refine everything very strong here. So it's pretty good to can let it like this. This is the last possible refinement from my perspective. And of course you can always use here this one here as well. Okay, but that's just right now the theory of the accumulation phase. And what we can also see sometimes is like this, we define our order block, our supply zone, and then the market will do exactly over here in our order blocks. It will create an accumulation phase. Break of structure, and then we wait for price to come here, tapping into this entry, going lower. That's also possible, so keep that in mind, guys. Okay, in this case we've recognized it pretty nicely here on the higher time frame. Price reacted pretty good on it. It's textbook example actually of Wyckoff. Okay, hopefully you got the point, guys. What else can we view more accumulation phases? And this is right now pretty nice, to be honest. So this is a wonderful example. Can you see this? More than likely this is the better accumulation phase. So let's have a look here. This one looks pretty good. 4 hours, yeah, look at this. This is again textbook, guys. This is textbook. Price creating here BC, testing PSY, right? Automatic reaction. Why? We are still in an uptrend. Okay, this is structural point. We're still in an uptrend. Look at this. We grabbed liquidity even below that. Okay, price went up higher, not higher, went actually lower, so it created ST. But in this case, we didn't create that SOV, but price went up higher, and that's it. But it's enough for us. For us, this is enough. Let's see. Look at this. It's enough because we cleared out liquidity. It's a kind of concept, but it's, you can see it's not always almost the same. Okay, so in this case you don't have the SOV, you don't have it. Okay, but it's not a problem. So this is what I wanted to tell you with this video, is we do not use the exact same formula. For us, important is just to see that liquidity was grabbed, and we combine everything with each other. Okay, but more of that we will go over in the next videos. But this is right now just for you to understand what am I talking about and how we use in the DRSFX community the Wyckoff accumulation and distribution phase.